From FXEmpire, this is Chris taking a look at the S&P 500. The S&P 500 has been rather quiet in general, but at this point it does look a bit negative as we have seen the market pull back early in the day. That makes a little bit of sense because market participants will be very concerned about the idea of the FOMC meeting coming out, and perhaps maybe not so much the rate decision, but also the statement. The press conference most certainly will be parsed, and therefore I think you have to look at it through the prism of a market that is possibly going to take a little bit of a break. That being said, I do think it's probably only a matter of time before buyers would return. For example, the 4,900 level, I think, offers minor support. 4,800 underneath there is even more supported, and therefore people will be paying more attention to it. Underneath that, we have 4,700 with the 50-day EMA coming into the picture as well. I don't have any interest in shorting the S&P 500, but I do recognize that things could be a bit noisy in the short term. Given enough time, I think we're going to go looking to the 5,000 level. That's almost a foregone conclusion, unless, of course, the Fed says there's absolutely no chance of an interest rate hike this year. I really doubt that's going to be the case. Now that Federal Reserve governors are not allowed to day trade the markets, they do treat them a little bit different. But ultimately, they're still in this pocket of Wall Street looking to pump up assets. Now, that being said, the market has gotten a little overextended, so we definitely need to cool off a bit. I think that would be a nice opportunity. Whether or not we get it remains to be seen, but you do have to look at the occasional pullback as a potential buying opportunity until we get to the 5,000 level, where I would expect to see a lot of psychological and structural resistance.